Hello and welcome to the Tax Roundup for July, and Happy New Financial Year. For members of Knowledge Shop, you can access all the New Year standards on the Knowledge Bank, so go in and take a look. This month we're looking at exactly who can access the 28.5% company tax rate for all those doing tax returns. We've got some good news on SuperStream for small business. We're looking at the more on the limited recourse borrowing arrangements and those safe harbour provisions. And finally, the 1 July 2016 withholding tax rules. Mike's going to look at what's available now from the ATO. But first off, across to Mike to take a closer look at exactly who can access that 28.5% company tax rate.
We've been receiving lots of questions from people about the scope of the lower corporate tax rate that applies for the 2016 year for companies. So now that we have some tax forms and instructions from the ATO on the 2016 stationery, we can clarify that in order for companies to qualify for the lower corporate tax rate of 28.5% for the 2016 year, the company itself needs to be a small business entity. So when you start completing 2016 company tax returns, you'll see a new label on the tax return, and it's simply check the box if the company is a small business entity. Now, a couple of things just to remember there is, firstly, in order for the company to be a small business entity, it needs to be carrying on a business in its own right. So the fact that it might be related to another entity that carries on the business is not enough. The fact it might receive distributions, for example, from a trust that might be a small business entity, that's not enough either. The company itself must be a small business entity. If it's not, then don't check the box to say that it is a small business entity. If the company is not a small business entity, then it doesn't get the lower tax rate. It'll be taxed at 30%. The other thing to remember is when you're looking at whether the company might be a SBE or not, you need to take into account the grouping rules. So you need to identify connected entities and affiliates and apply the grouped aggregated turnover test to determine whether the company's aggregated turnover falls under the $2 million threshold. So a few important things to remember there. Some examples: companies that only carry on passive investment activities. If those passive investment activities do not amount to a business activity under general principles, then again, the company's probably not an SBE and be taxed at normal corporate tax rates. A company might be acting basically as a bucket company to receive distributions from a trust that carries on a business. Unless that company carries on business in its own right, then it won't be an SBE. It'll be taxed at 30% on the income that it's being received, even though that income might be received from a related party that is carrying on a business, and that may well be an SBE. So it's pretty important to get that right. This is a new label you'll see on 2016 company tax returns. So don't look at the company in isolation. Remember the grouping rules, and also remember, really important to determine whether that company carries on a business.
From the ATO this month, Rae is going to take you through that reprieve for small business with SuperStream.
SuperStream. We've all known it's coming for a very, very long time, and fingers crossed everyone is ready for it now. However, for small businesses, so those are entities that have 19 or fewer employees, the ATO have been hearing an awful lot about how difficult it is to get ready and having the right software and a various range of problems. So what the tax office have done is said that for those small business employers, they will allow some additional time for them to finish getting ready to be fully compliant with SuperStream. So until the 28th of October, the tax office have said they will take no compliance action against those small business employers, but they still expect them to be fully compliant by that date. For all other employers, hopefully they're already compliant and have met the SuperStream deadline of the 30th of June 2016.
And some more good news, this time for those with self-managed super funds with non-bank LRBAs.
Limited recourse borrowing arrangements. Now, this is something that's been on the watch list for quite a while, and the ATO did issue that PCG back in April saying these are the terms we'd like to see for a safe harbour ruling of a limited recourse borrowing arrangement. Unfortunately, they gave the deadline of the 30th of June for all those limited recourse borrowing arrangements to be considered fully compliant. Not surprisingly, that did cause a lot of concern and a lot of stress because that deadline was just not going to be achievable for an awful lot of people. So what the ATO come back and said, okay, well, we will now provide an extension until the 31st of January 2017 for all those limited recourse borrowing arrangements to be fully compliant with the safe harbour guidelines. And in the meantime, they will also provide additional guidance in relation to non-arm's length income for super funds, self-managed super funds specifically. In addition to providing that extended deadline, they've also said that by September they will provide further guidance to allow further planning for that extended deadline. So those who are under an awful lot of pressure before the end of June, they have a bit more time, but that doesn't mean they should stop. They should keep moving, but hopefully with a bit more guidance and certainty from the tax office.
And finally, across to Mike, who's going to take you through what's new from the ATO and exactly how to deal with those 1 July 2016 withholding tax issues.
Now that 1 July 2016 has come and gone, the new withholding rules on certain property transactions are well and truly in play now. So just to reiterate roughly how these rules are intended to operate, new form of withholding tax applies when land and buildings in Australia, shares in certain companies, units in certain unit trusts, where transactions are taking place from 1 July 2016 onwards involving those types of assets, where they're classified as taxable Australian property, then the withholding rules can potentially apply. Now, while these rules are meant to capture situations where a non-resident is disposing of these assets, the way the rules are structured means that the transactions that could be caught by these rules are potentially much broader, including situations where a resident is selling, for example, a property to another resident. The reason for that is when real property, so land and buildings worth $2 million or more, is sold, you have to assume that the vendor is a non-resident unless they have provided a clearance certificate that they have obtained from the ATO. So potentially there'll be many transactions that fall within the scope of these withholding rules, even though there's no non-resident party involved. Now, to assist in administering and working through those rules, the ATO had said a little while ago that they would be providing an online system to access some of the mechanisms, I guess, we need to manage these rules, including the clearance certificate process. I can report now that the ATO has made available those online forms. Previously, we had some PDF documents that you could download and fill in, but the online system, the online form has now become available. So the process for obtaining a clearance certificate, also when one of these transactions occurs where the withholding rules are triggered, the purchaser has a responsibility to inform the ATO certain details of the transaction. Again, that is something that can be done online to save having to download forms and things. So just be aware for those who are involved with assisting with transactions from 1 July 2016 onwards, where the new withholding rules come into play. Those online forms from the ATO are now available and can be used, and hopefully will speed up some of the process for dealing with those rules.
And that's a tax roundup for this month. Don't forget, if you're a member of Knowledge Shop, you have access to all those New Year standards on the knowledge base. But if you're not a member of Knowledge Shop as yet, give Julie a call on 1800 800 232 and she can show you exactly what we've got to offer. Talk to you soon.